Hi, today's Thursday, the 26th of September, 2024. I am Jason Shapiro with Crowded Market Report, trying to make sense of what's going on in the markets today. So, again, the stimulus news out of China is supposed to be bullish assets, and quite frankly was. Dow went up pretty close to highs. We did have the NASDAQ come off quite a bit off of highs. Went through this sort of little mini collapse here midday with some news on SMCI being investigated or whatever, but, rebounded. Actually tested that low. It was looking pretty bad here and then rebounded. S&P also, same thing, rebounded. Interesting here how the S&P made a new low there, whereas the NASDAQ didn't. And we talk about NASDAQ lead lag type of thing as a short-term intraday trading thing. There was one that sort of confirmed that. I really don't know what else to say about the stock market, except that the S&P is on an all-time high right here. And Dow basically is too. And the DAX is, and the Euro stocks basically is. We can sit here and talk all day about what's the implications for Chinese stimulus and the election and the Fed and all these macro things and overbought or whatever. It's also stupid to me. The stock market, the S&P in particular, is on an all-time high here. If you are long, you're in the money. If you are short, you're losing money. And until something changes off of that, I just don't know what there is to talk about. We can make all these wonderful arguments and have all these wonderful debates, but there's no debate that the S&P is on an all-time high. There's no debating that, and that's really what matters to us, right? So unless you want to say this exact second right now is the all-time high for the entire history of mankind, the S&P, you're fighting the tape. And I don't suggest that. There's plenty of time to get short if you want to be bearish. Now it's not the time for that. Okay? I guess the only other real interesting thing that went on today was in energy. We had Saudi Arabia come out and say some pretty bearish things about energy. And with that, energy did in fact go down. Crude oil was down quite a bit. This was when Saudi came out, and it really tried to rebound, but did not rebound very well off of that line. If I'm going to say anything, I'm going to say that heating oil performed best. Heating oil is also where the most crowded shorts are in the energy space. If you're looking to be long energy, I would suggest being long heating oil. Performing best, it's where the most shorts are. It's where the best risk reward is, if that's the play you want to make. A similar thing in currencies, where the dollar really didn't do too much today. It did go down. It is close, but off lows from yesterday. But while this is going on, you have the euro basically making new highs, the pound making new highs, Canada, Aussie, New Zealand. The one thing that is not is the yen. And I will say again, this is where the most crowdedness is. And you can see how much off of highs the yen is here, right? Whereas you can see the Aussies on highs, pound on highs, Canada pretty close to the high for this move anyway. Swiss franc pretty close, and euro right on it. So again, if you're looking to play a stronger dollar bet, I think against the yen is the place to go. Now, this could all change. Tonight we have a CPI, Tokyo CPI number coming out of Japan, which will probably cause some volatility there. But again, based on crowdedness, based on action, based on the tape, I think the yen is the place to be short relative to the other currencies. And other than that, everything kind of did what it was arguably supposed to do, with this huge Chinese stimulus that we're hearing about. Gold, making all-time highs, as it should. Silver ripping higher, as it should. Copper ripping higher, as it should. I believe it was right here where Goldman Sachs came out and said, copper is downgraded. I believe it was right here. then you saw that copper was super crowded along here, went neutral here, and then has resumed the story, but it needed to get all that crowdedness out, which it successfully did, and then has resumed its move up. So anyway, those are the things that I'm looking at. I'll say it again. Don't short all-time highs. I don't care if it's S&P. I don't care if it's gold. We can see that the gold positioning is actually quite crowded here, but you don't short it because of that. You know, you need market confirmation. We have not gotten that. With it closing on all-time highs, there's clearly no market confirmation that it's going down. So there's no reason to short it right here, just as much as there's no reason to short S&P. I'm not biased towards markets. I'm not biased towards anything. I'm just watching positioning and I'm watching the tape. And the tape is saying that now is not the time to be short these things. That's simple, you know. Okay, so those are my thoughts for today. Hope it helps. Please like the video if in fact you liked it. Please check us out, crowdedmarketreport.com. Check out our free Substack. We're on Twitter, all that. Okay, good day to everyone, and we will talk again soon. Thanks.